Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So far we have completed 27 problems on financial management. In this video, 5 more problems, 28, 29, 30, 31, 32. These 5 problems I'm going to explain you in detail. So far we have done the problems on cost of capital, computing the KD, KP, KE. In this video, KR, cost of retained earnings. 2 problems I am going to explain on cost of retained earnings. Then how to calculate the EPS, then combined problem. In single problem only we have to calculate KD, KP, KE. And similarly, one problem I am going to explain you about the WACC, weighted average cost of capital. The last few more videos are left on this financial management. So if you want to have a perfection on this topic of financial management, watch all the videos from beginning till end. Don't join in between and don't skip in between. If you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject financial decision making, select the videos of financial management. Watch all the videos, be perfect, be confident on the subject, on the topic of financial management. Now I'm going to start the next problem, that is problem number 28. So before that, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep ready the problems. Take the screenshot of these 5 problems, then I'll explain all the points. Now, see the 28th problem. Firm's KE. KE stands for cost of equity. Return available to shareholders is 10%. So simply KE is equal to 10%. The average tax rate of shareholders is 30%. And it is expected that 2% is brokerage cost that shareholders will have to pay while investing their dividends in alternative securities. What is the cost of retained earnings? See here, normally cost of retained earnings will be same as cost of equity, but sometimes we have to consider the tax liability of the shareholders. When shareholders receive the income in the form of dividend, they have to pay tax. They have to pay tax. Now, without paying the tax, the amount is retained with the business. So we have to consider what is the tax rate applicable to shareholders. In this problem, the tax rate applicable to shareholders are 30%, 0.3. Similarly, the brokerage required to be paid to purchase the new security for the shareholders is 2% given in the problem. So how to calculate the cost of retained earning? The formula is KR, cost of retained earning, is equal to KE into 1 minus T into 1 minus B. KR stand for cost of retained earning, that we have to find out. KE, cost of equity, that is given in the problem, 10%. Then T, tax rate, given in the problem, 30%. B, brokerage cost of purchasing securities by the shareholders is 2%. 2% means 2 by 100, 0.02. Now substitute the values in this formula. KE 10, T 0.3, B 0.02. So 10 into 1 minus 0.3 is 0.7. 1 minus 0.02 is 0.98. Multiply all the 3, 6.86. That is the KR, cost of retained earnings. That's all. So very easy to calculate KR. The only thing you have to remember the formula. Next, 29th problem. The cost of equity KE is 17%. All the shareholders pay tax at 30% and 2% brokerage for reinvesting their dividend. What is the cost of retained earning to the company? Exactly similar to the previous problem. KR we have to calculate. KE is given 17%, cost of equity. T, tax rate is given 30%. B, brokerage cost is given 2%, 0.02. Substitute the values. KR is equal to KE into 1 minus T into 1 minus B. So here KE is 17%. Tax rate 30%, 0.3, 1 minus 0.3. Brokerage 2%, 0.02, 1 minus 0.02. So 1 minus 0.3 is 0.7. 1 minus 0.02 is 0.98. 11.66. This is the cost of retained earnings. Next, problem number 30th. Following is the extract from the financial statements of ABC Limited. Now, operating profit before interest and tax. The operating profit is 105. All these are rupees in lakhs. The operating profit 105, interest on debenture 33, income tax 36. The operating profit minus interest on debenture minus income tax, net profit after tax is 36. Equity share capital rupees 10 each, 200. Then reserves in surplus 100 and 15% debenture of rupees 100 each, 220 lakhs. So total 520 lakhs. Market price of equity share and debenture is rupees 12 and 93.75. The market price of equity is 12 and the market price of debenture is 93.75. Find out the earnings per share, cost of equity shares and cost of debentures. In this problem, three things it is asking you to calculate: EPS, earnings per share, then cost of equity, KE, and lastly cost of debenture, KD. That's it. One by one we will find out. First, it is asking you to calculate earnings per share, EPS. The formula for EPS is PAT divided by number of shares. PAT divided by number of equity shares. The PAT is given in the problem, 36 lakh. No calculation, nothing. It is given 36 lakh rupees is the PAT. Number of equity shares not given. Now we have to find out. The total equity share capital is 220 lakhs. Is it 220? Yes. No, 200 lakhs. It is 200 lakhs. Total equity share capital. Each share face value is 10 rupees. So 200 lakh divided by 10. So 20 lakh shares. Number of equity shares 200 lakh rupees divided by per share face value 10 rupees. So 20 lakh shares are there. Now we substitute EPS is equal to PAT divided by number of equity shares. The PAT is 36 lakh given in the problem. Number of equity shares 20 lakh. Just now we have calculated 36 by 20, 1.8. 1 rupee 80 paisa. So earnings per share is rupee 1.8. First answer completed. The second question it is asking you KE, cost of equity. K. So K is equal to E by P into 100. It is not given in the problem which approach we have to apply. But according to information given in the problem, we apply that approach. Dividend information is not given in the problem, but earning information is given. According to EP approach, K is equal to E by P into 100. E stands for earning per share, EPS. Already we have calculated earning per share 1.8. And P stands for market price per share. It is given in the last line in the problem. The market price per share is 12 rupees. So 1.8 is EPS and market price per share MPS is 12 into 100. So 15% is the cost of equity K. Two items we have calculated. The third item is cost of debentures KD. The cost of debentures after tax, the formula is I divided by NP into 1 minus T into 100. Now carefully we have to find out what is the different values of the variables. I is equal to interest. What is the interest on debentures given in the problem? 15%. 15% debentures of 220 lakhs. The total debentures are 220 lakhs and 15% is the rate of interest. So 15% of 220 is 33 lakhs. That is the interest. Now income tax is given 36 lakh and profit after tax is 36 lakh. If you see the statement given in the problem, income tax is 36 lakh, net profit after tax is 36 lakh. In other words, when income tax and PAT both are same, that means the tax rate is 50%. 50% tax paid and remaining 50% is PAT. 50-50. So by comparing this income tax and PAT, we can conclude that the tax rate is 50%. T is equal to 50%, 0.5. Now net proceeds on issue. Net proceeds on issue we have to find out. Actually, how many debentures are there? The total debentures are 220 lakhs. 220 lakh is the total debentures, and each debenture, the face value is 100. The face value of each debenture is 100. So how many debentures are there? 220 divided by 100. 220 divided by 100, 2.20 lakhs. 2.2 lakh debentures are there. Each debenture 100 rupees. So if you multiply 2.20 into 100, you will get 220. You will get 220. So we got number of debentures 2.20 lakhs. And what is the market price per debenture? 93.75 given in the last line. Each debenture, the market price is 93.75. Now multiply number of debentures 2.20 lakh debentures into 93.75. So net proceeds are 206.25. Rupees 206.25 lakh. This is the net proceeds. Now KD after tax. I divide by NP into 1 minus T into 100. All the variables we have calculated. 33. I is 33. NP is 206.25. Tax rate is 0.5. Now you multiply, you will get 8% is the KD. So in this 30th problem, 3 items to be calculated. The first is EPS. The formula PAT divided by number of shares. Secondly, KE, cost of equity, that is E by P into 100. Thirdly, KD, after tax, I divided by NP into 1 minus T into 100. This is the end of 30th problem. Now 31. Problem number 31, see carefully. On the basis of the following information, determine the cost of equity, cost of capital. Cost of capital. Assume tax rate 40%. Income tax rate is 40%. A, equity share capital. B, retained earnings. C, debentures. D, preferential capital. So in this case, in this problem, we have to calculate KE, KR, KP and KD. All the 4 different sources of funds. We have to find out the cost. One by one we will take up. The first is equity share capital. So 10 lakh equity share of rupees 100 each. Market value per share 250. Growth rate in dividend is 6%. Dividend per share is 25. So we are given dividend. We are given growth rate. We are given market price. So we can apply DP plus G approach. DP plus G approach because growth rate is also given to calculate KE. So cost of equity D by P into 100 plus G. Right? D stands for dividend. It is given in the problem 25 rupees dividend. Market price per share is given 250. Right? And growth rate is given 6%. So first you divide 25 divided by 250 into 100, you will get 10 rupees. 10%. And this 6%. So 10 plus 6, 16% is the KE, cost of equity. The second case is, it is asking you retained earnings rupees 5 crore. We have to calculate the cost of retained earning. Just now I told you the cost of retained earning is same as cost of equity, provided the income tax of the shareholder or brokerage payable by the shareholder is given, then it will change. If the rate of tax of the shareholder is not given, if the brokerage payable by the shareholder is not given, in that case we can take KE is equal to KR. That means cost of equity and cost of retained earning will be same. So in our problem, what is the tax rate applicable to the shareholder not given? And what is the brokerage payable by the shareholder on purchasing new securities not given in the problem? So simply we can write KE is equal to KR. How much is KE we got? 16%. So KR also 16%. Same. KE, KR. Here I have given assuming no tax rate on shareholders and no brokerage cost is given in the problem. So KR is equal to KE is equal to 16%. Now we'll come to the third one, cost of debentures, KD. For debentures, what is the information given? Debentures are 1 lakh debentures of 100 each, interest rate 15%, current market value 110. Current market value. Easily we can find out. I divide by NP into 1 minus T into 100. I stands for interest. What is the rate of interest debentures? It is given debentures are 15% of 1 crore. 1 lakh into 100. 1 lakh debentures are there. Each debenture 100 rupees. So 1 lakh into 100, 100 lakhs. 100 lakhs means 1 crore. 100 lakh means 1 crore. So interest is equal to 15% of 1 crore is 15 lakh. 15 lakh. Similarly, NP, net proceeds. The market price of the debenture is 110. Market price of debenture is 110. So net proceeds 1 lakh debentures into 110. 1 crore 10 lakh. So net proceeds are 1 crore 10 lakh. Tax rate is given in the first line, 40%, 0.4. So KD after tax, I 15 lakh, NP 1 crore 10 lakh into 1 minus R, 1 minus T, 0.4. So 1 minus 0.4 is 0.6. So divide 15 lakh divided by 1 crore 10 lakh into 0.6 into 100, 8.18%, that is the KD. Now lastly, we have to calculate KP, cost of preference capital. So here 50,000 shares of 100 is dividend rate 11% and current market price is 90 rupees. So first of all, the formula for KP, cost of preference capital, DP by NP into 100. DP stands for dividend, preference dividend. It is given 11%. 11% of 50,000 into 100 is 50 lakh. 50,000 shares into 100 rupees is 50 lakh. So 11% of 50 lakh, it comes to 5 lakh 50,000. That is a DP. Now net proceeds. What is the market value per share? 90 rupees. How many shares are there? 50,000. So 50,000 into 90, you will get 45 lakh. So 45 lakh rupees the net proceeds. Now simply we substitute in the formula. DP by NP into 100. DP is 5 lakh 50,000. NP is 45 lakh. 5 lakh 50 divided by 45 lakh into 100. 12.22%. That is the KP. So in one problem only, we have calculated all the 4 sources. That is KE, cost of equity, KR, cost of retained earning, KD, cost of debentures, debt, and KP, cost of preference capital. That's it. 31 problem completed. Now see the 32nd problem. Problem number 32. A firm has the following capital structure and the after tax cost for different sources of funds. The sources of funds are debt, preference, equity, retained earnings. 4 sources are there. And the amount is given 20 lakh, 10 lakh, 30 lakh, 40 lakh. And proportion. See here, if you add up the total amount, 20 lakh plus 10 lakh plus 30 lakh plus 40 lakh, you will get 1 crore. 1 crore is the total. Out of 1 crore, 20 lakh is the debt. What is the proportion? So 20 lakh divided by 1 crore into 100, you will get 20%. Similarly, 10 lakh is the preference share capital. So what is the proportion? 10 lakh divided by 1 crore into 100, you will get 10%. Then equity capital 30 lakh. So what is the proportion? 30 lakh divided by 1 crore into 100, 30%. Lastly, retained earnings are 40 lakh. So 40 lakh divided by 1 crore into 100, 40%. Then specific cost, after tax cost. This after tax cost is nothing but the specific cost of capital. For example, first one, debt. So KD is 4.5% and KP is 9%, KE is 11%, retained earning KR is 10%. Compute the weighted average cost of capital WACC. We have to find. This is the first problem where we are computing overall cost of capital or weighted average cost of capital. Calculation of weighted average cost of capital WACC. The source of funds, debt, preference, equity, retained earnings. Amounts are given in the problem: 20 lakh, 10 lakh, 30 lakh, 40 lakh, 1 crore. Proportion, we don't require proportion. Only for our information, it is given 20%, 10%, 30%, 40%, total 100%. Now, specific cost is given in the problem: 4.5% KD, 9% KP, 11% KE, and 10% retained KR. Right? Now, total cost. Multiply the amount with the specific cost. What is the amount here? 20 lakh. What is the specific cost? 4.5. So 20 lakh into 4.5%, you will get 90,000. 10 lakh into 9%, you will get 90,000. 30 lakh into 11%, 3 lakh 30,000. 40 lakh into 10%, 4 lakh. Take the total of the cost, 9 lakh 10,000. The total cost is 9 lakh 10,000. The total amount is 1 crore. So total fund of the company is 1 crore. On 1 crore, the company is paying the cost. Paying the cost to equity shareholders, paying the cost to debenture holders, paying the cost to preference shareholders. The total cost comes to 9 lakh 10,000. The WACC, weighted average cost of capital, is equal to total cost divided by total amount into 100. So what is the total cost? 9 lakh 10,000. What is the total amount? 1 crore. So 9 lakh 10,000 divided by 1 crore into 100, you will get 9.1%. This 9.1% is called WACC, weighted average cost of capital. So in this problem, in this video, first two problems I have explained regarding KR, cost of retained earning. Then two more problems where we have calculated EPS, we have calculated KP, KD. And in one problem, all the four items, that is KE, KR, KP, KD. And one problem we have solved where we have calculated WACC, weighted average cost of capital. Inshallah, we'll continue the next problem in the next video.